Ladies and gentlemen, dear distinguished guests, good afternoon. I would like to take this opportunity to thank you to attend this year's BSF 2025 panel titled Shaping Europe's Economic Resilience, Strategic Responses, Integration of Payment Systems, and the Digital Euro. I would also like to thank or to express my gratitude for having the opportunity to contribute and organize this panel at the BSF for the first time in the history of Banka Slovenia. As you all know, the uncertainty around geopolitics and a weakened security environment are harming Europe's economy. But some of the challenges Europe faces can and should be considered as opportunities. We have the chance to strengthen Europe's economic competitiveness, especially at a time when relative stability of regulations and of the business environment may carry a bigger premium in the eyes of investors. Part of the necessary efforts to achieve this has to do with our ability to create the conditions for widespread use of competitive and innovative payment solutions for European companies and people. This includes introduction of the digital euro as legal tender. There is a need for secure and resilient financial market infrastructure that connect us globally, but increase independence from partners outside of Europe. Our distinguished guest, Mr. Madis Müller, Governor of Eesti Pank, is especially well positioned to give us a well-structured presentation and introduction to today's topic of the panel. After the presentation, Jana Randow, Bloomberg, will guide us to the discussion. She will moderate the panel with Irena Radović, Governor of the Central Bank of Montenegro, Mr. Ludovic Francesconi, Chief Member of and Strategy Officer from European Payment Initiative, Mr. Agustín Reyna, Director General from the European Consumer Organization, and me. Let me invite our first distinguished guest to the stage, dear Madis. Again, a sincere thank for coming to Slovenia, and we are all delighted to hear from you. Thank you.
Thank you very much, Primož. Ladies and gentlemen, it is an honor to be here in Bled and speak to you. It is actually my 5th time already in Slovenia in about as many years. And I have always really enjoyed coming here. Lake Bled, of course, is particularly beautiful, and the location here for today's conference. So not only do I enjoy coming back, but someone from the Central Bank of Slovenia also, I guess, enjoys inviting me. So I'm very lucky to be here again. And with that, let me turn to my speech. The European economy is on a path of gradual recovery, and inflation has slowed to a 2% target. So one could argue that from a central banker's perspective, we have overcome our immediate challenges, but that however, would clearly be too narrow of an interpretation of Europe's broader situation. And there's certainly no shortage of issues for policy that demand the attention of policymakers. Several prominent reports have recently drawn attention to structural weaknesses in the European economy and highlighted critical steps needed to improve competitiveness and resilience. Implementing these reforms takes time, but I think there is now a shared sense of urgency that hopefully will drive the necessary changes. The ongoing war in Europe, the need to strengthen our defense capabilities and support Ukraine in its fight against the aggressor, and increasingly complicated trade relations with the US, all of those add to the complexity. In my speech today, I will focus on one vital aspect, payments, which can be described as the lifeblood of the economy. And I will argue that strengthening the efficiency and resilience of Europe's payment systems is crucial for reinforcing the resilience of the European economy. First, some facts about the European payments landscape, which clearly, I believe, point to a need for change. First, cash usage in retail payments is rapidly declining, while electronic payments continue to gain ground. Second, card payments are increasingly becoming the dominant payment method. Third, despite years of efforts to create the European card payment scheme that works across the continent, we have not succeeded and still rely heavily on American providers such as Visa and MasterCard to process most of our payments in Europe. Fourth, as people carry less cash, our reliance on electronic payments makes us vulnerable to disruptions, leaving consumers and merchants with fewer alternatives. And finally, although unrelated to retail payments, which is the main focus of my speech, the system for processing securities and foreign exchange transactions also is quite cumbersome and inefficient. So what I have just presented is a diagnosis of where we stand in the area of payments in Europe. We are missing a true European payment solution that is available across the continent, even as consumers increasingly prefer digital payments over cash. This may not seem like an immediate problem as long as American card companies continue to offer these services on reasonable terms. However, it also could become a problem in certain scenarios. That is why the call for a widely accepted pan-European retail payment solution is part of the broader effort to strengthen Europe's strategic autonomy. In addition, I believe we should focus more on the resilience of our payment systems. There have recently been several events that have highlighted the vulnerabilities in the smooth operation and autonomy of digital payments. The war in Ukraine has been accompanied by cyber and hybrid attacks on critical infrastructure and services, destabilizing Europe's financial system and undermining its sense of security through disinformation. A massive electricity blackout in the Iberian Peninsula this spring disrupted critical infrastructure and services across Spain and Portugal, including financial services, leaving people unable to make payments or withdraw cash. Also, recent experience shows that even economic relations with our long-term allies and trading partners can come under a sudden strain. This underlines the danger of relying entirely on external partners for critical goods and services, including everyday payments and cash withdrawals. And finally, there is a strong push by US authorities to promote the broad use of US dollar-based stablecoins as a new payment solution. If European consumers were to start using dollar-denominated payment methods on a large scale, it would create a new set of challenges for our financial system. So in sum, Europe is missing an effective pan-European retail payment solution, needs a more resilient payment system, and faces also competition from technology-driven alternatives. Yet these challenges are also opportunities. As the world's second largest economy and issuer of the second most used currency, Europe has a strong foundation to build upon. And the euro, of course, is also more than just a currency. It's a symbol of unity, integration, shared identity, and stability. Europe has a clear vision for strengthening both our economy and our strategic autonomy. In recent years, high-level strategic guidance has been provided first by Sauli Niinistö, former president of Finland, who urged Europe to strengthen its financial market infrastructure and design legislation capable of withstanding any crisis. Mario Draghi, the former ECB president and Prime Minister of Italy, who called for a truly unified capital markets union and more integrated financial market infrastructures. Christine Lagarde, president of the European Central Bank, who spoke of a global euro moment recently and called on Europe to strengthen its geopolitical credibility, economic resilience, and institutions so that Europe could reach its full potential. This strategic vision now needs to be turned into action. I see good momentum in several areas, particularly in building payments infrastructure and creating the right conditions for innovative, competitive, and widely used European payment solutions. I will focus mainly on retail payments, but also on building the digital payment infrastructure that connects citizens and merchants across Europe, including digital euro as a new means of payment and legal tender. The starting point, of course, is that payments are increasingly electronic and increasingly also fast. I recall a comment by an Estonian businessman who was critical of instant payments. He said that he preferred money to move slowly, especially when it was leaving his bank account, and it should take a long time and be very difficult. But even he admitted that he was happy to receive payments instantly at any time of the day or night. And this is the reality now. Instant payments are here to stay, and they are creating also new opportunities and business models. In Estonia, digital payments have largely replaced cash, and in that sense, the market is close to reaching its full potential. Instant payments have been fully adopted by our banks, which now offer new instant payment solutions for person-to-person, e-commerce, and more recently also point-of-sale transactions, particularly targeting small merchants who do not accept cards. These solutions work seamlessly within Estonia and also in the Baltics, but they are not widely used as people remain most accustomed to traditional card payments. So I understand that in Slovenia, cash is still a bit more commonly used, even though the share of card payments is growing. More than 2/3 of interbank payments in Slovenia are already settled instantly, and you have your own national solutions such as Flick as an alternative to cards. Ultimately, merchants expect payment solutions to offer broad coverage along with low acquiring fees and implementation costs. It is also very difficult to change consumer payment habits once they are used to already a convenient electronic method. Since card payments and popular mobile wallets like Apple Pay and Google Pay are widespread and easy to use, non-EU card schemes dominate the market in 13 out of 20 euro area countries, accounting for two-thirds of all card payments. In Estonia, we are almost entirely reliant on MasterCards, so with any disruption in the service of this individual provider, most citizens would be left without an alternative, as many do not carry cash anymore, and no viable digital alternative to card payments exists. So let me also say a few words about the fragmentation of payment solutions in Europe. For the private sector, overcoming this challenge has proven difficult. Since 2006, several market initiatives have attempted to create a pan-European payment solution that could compete with global card schemes. These attempts have failed either due to differing business objectives, national interests, or due to high investment needs. Even with broader cooperation in Europe and common standards for instant payments, the private sector still struggles to match the scale and service quality of global card schemes. So as a result, payment solutions remain fragmented, often limited to domestic use, as no common cross-border terms for merchant acceptance have been agreed. Encouragingly, however, the private sector also has not given up. So for example, since 2024, the European Payments Initiative has been rolling out its payment solution Vero. I think we will hear more about it very shortly. A digital wallet that enables instant person-to-person transfers, e-commerce payments, and in-store purchases. The service is available in France, Germany, and Belgium. With a combined population of over 162 million, the European Payments Initiative has also been welcomed by the Eurosystem as a potential market-led pan-European payment solution. At the same time, parallel initiatives such as the European Payments Alliance seek to make existing national instant payment solutions like Bizum in Spain, Bancomat Pay in Italy, and MB Way in Portugal interoperable at the merchant level. So this would allow customers to use familiar payment methods also when they travel abroad. Yet, Despite the progress by both the European Payment Initiative and the Euro Payment Alliance, they are at this point unlikely to compete on an equal footing with global card schemes in the near future. And this brings me to the digital euro that is designed to foster a truly pan-European payment method through a public-private partnership. Until now, issuing banknotes and coins has been the only way for the central bank to provide the public with official currency for everyday use. Paying in cash always works, whether there is a power outage or a data connection problem. Providing such a safe means of payment is a traditional and an important function of a central bank. Since 2002, euro banknotes and coins have been the official means of payment available in every euro area country, providing a tangible expression of European unity as a legal tender. 2 decades later, after the COVID crisis, rapid digitalization, and the declining use of cash for everyday purchases, we must, however, adapt and develop an electronic version of legal tender as well. So in simple terms, the digital euro can be seen as the evolution of physical legal tender into its digital form, a kind of digital cash, if you wish. With its payment infrastructure, the digital euro will be provided as a public service through banks for the benefit of around 350 million citizens and all merchants across the Eurozone. Just as the introduction of euro banknotes and coins symbolized unity, the digital euro will unite Europe in the digital age, helping to build a stronger and more resilient monetary union and economy. Safeguards will also be in place to protect financial stability, including fixed holding limits to prevent excessive deposit outflows from banks. Digital euro accounts will always be linked to a user's bank account, allowing automatic transfers in and out of the digital wallet depending on the balance and holding limits. This will reinforce the two-tier monetary system. Banks will retain their customer relationships and visibility into their customers' payment behavior and habits, which is essential for maintaining the quality of lending portfolios. For the digital euro to be worthwhile for people, merchants, and banks, it has to also make economic sense, delivering clear, measurable savings. So citizens will be able to use the digital euro free of charge. Merchants will benefit from lower service fees for accepting digital euro payments. Banks will avoid the scheme and processing fees they currently pay for card services, as these will be covered by the central bank. Implementation costs will be minimized, as banks will not need to build new systems for KYC and anti-money laundering or sanction screening. And they can link their existing systems already used for instant payments also to process digital euro payments. Innovation opportunities will expand, as banks can use the public infrastructure of the digital euro without extra charges to expand their own payment solutions and value-added services at the pan-European level. Given that the private sector is already rolling out instant payment solutions, I would emphasize the last point. The objective is for private initiatives, such as the European Payment Initiatives and others, to be able to integrate with the digital euro scheme. This will support the rapid rollout of private sector instant payment solutions as alternatives to card payments. At the same time, it will ensure that banks can use the same mobile app both for instant payments and the digital euro. Customers will then be able to continue using their familiar payment apps to pay any merchant in the 20 countries of the euro area. So this is how the digital euro will help address the fragmentation and limited coverage of bank-specific, national, and regional digital payment solutions. It will boost competition while complementing cash, instant payments, and card payments, ultimately strengthening and further integrating the EU digital payments ecosystem. So my final point concerns European-level resilience and national crisis preparedness. An important feature of the digital euro is the ability to make offline payments, creating a backup solution for digital payments when online services are disrupted. Today, cash remains the only alternative during power or connectivity outages, but it is of little use if people no longer carry cash, as is increasingly the case. The digital euro is being designed to ensure the continuity of digital payments. Even during prolonged disruptions to bank services, digital euro payments will still remain functional. Offline digital euro cash will continue to circulate, providing then a genuine alternative to physical cash. So let me conclude. Payments are the lifeblood of our economy, and their efficiency and resilience are essential for Europe's prosperity and security. The digital euro, alongside private sector innovation, will allow us to strengthen our financial system, reduce vulnerabilities, and build true pan-European solutions. It will not replace cash, cards, or instant payments, but will complement them, making our system more robust and future-proof. With the euro as a symbol of unity and resilience, we now have the opportunity to shape the future of payments in a way that serves all Europeans. So I think we should seize that opportunity together. And I will finish by that. Thank you.
Well, thank you, Governor Müller. You raised the bar for all of us here because that was a very comprehensive introduction, and we will try and unpack what we just heard over the next hour or so. So let me introduce myself. I'm Jana Randow. I write about economics and central banking at Bloomberg out of Frankfurt, and frequently also from all kinds of places across the world. And with that, I would like to once again introduce my panelists and welcome them to the stage. We have, where are you? There you are. Acting Governor Primož Dolenc from Slovenia, of course. We have Governor Irena Radović from Montenegro. We have Agustín Reyna, the Director General of the European Consumer Organization, and we have Ludovic Francesconi, the Chief Strategy Officer at the European Payments Initiative. One thing I should say, if you have questions, that is very welcome. Save them until we are done. If it's super urgent, wave at us and we will make an exception, but I will allow for some time at the end. So I would encourage you to participate because this is a great opportunity to hear from the experts, okay? And with that, we will get started. Acting Governor, I want to ask you first, because you're the host and because you are a colleague of Governor Müller, of course, on the ECB's Governing Council. And I would like to start asking a little bit about the backdrop to this conversation we're having now about payments and the digital euro. And that is, of course, the geopolitical situation. We've seen war on the continent. We are seeing tensions. We are seeing the world order, in a way, changing. And I would be interested in your views on monetary stability in Europe and how what's happening around us has shaped your view on that.
Thank you. Indeed, there are quite some factors suggesting that, for example, inflation and economic environment as a whole has changed in recent years, and will, for example, inflation change inflation outlook for the future. It will be more volatile, more fragile to different factors. Let me name just a few of them: geopolitical tensions, conflicts we have, trade uncertainties, global challenge disruptions, structural changes connected to AI, and so on and so on. So everything has influenced how we see the inflation, how we see the economic outlook. And this volatile environment has led us to thinking that we should, let's say, rethink our monetary policy that we need to incorporate these risks into our strategy and into our economic models, and we have actually done that. Just this year we have updated our monetary policy strategy, and we have incorporated all these risks which could potentially cause inflation or more, let's say, broader economic uncertainty. But as Madis already alluded to, I think all these factors that are here and that are probably here to stay can be, in fact, or can present a valuable opportunity for us. So Europe can enhance our readiness to manage a variety of risks, also ranging to the risks such as cyber, hybrid, and so on and so on. So if we do something about that, we might boost our competitiveness. And there is another thing that, look, in Europe, I still think it's seen as, let's say, one part of the world where we have stability. So stability in regulations, stability in broader political sense, in economic stability, we have predictable business environment, and this might help us for the investors, for our outlook. And we need to support that even further, going even to payment system, to digital euro, and as Madis alluded, we need to support something that is essential lifeblood of the economy.
Mr. Reyna, I want to turn to you next, because you are, in a way, here speaking for the European consumer who is affected by all of this. And, of course, those crises that we heard about, that uncertainty, that shows up in higher inflation, it shows up in financial turbulence and banking uncertainty. And I'm wondering, like, how, if we turn it around and not look at it from the central banking perspective, but from the European consumer perspective, like, how are those risks perceived? And is there actually confidence and trust from the consumer side into payment systems, in the European authorities' ability to keep financial systems stable and running?
Thank you also for the invitation. It's really a pleasure to be here. I will make a distinction in your question. There is a point of trust, whether actually people trust that authorities, regulators, legislators are going to be able to create that stability, and there is a question of expectations. There is an expectation that decision makers are going to create a stable system to realize our social market economy, and basically people can fulfill their lives. And what is interesting is that there is also an expectation that when things go wrong, it's the decision makers that are going to solve it. The governor, you mentioned the case of raising prices. When we have seen post-COVID and post the invasion of Ukraine, prices raising up, partly because of inflation, people did not turn to the supermarkets about why prices are going up. People were asking, what are you as regulators going to do in order to bring the prices down? So there is an increasing expectation that the regulators and decision makers need to take the right decisions in order to protect them and create much needed stability. At the same time, when we talk about the legislators or the decision makers or the regulators in your case, there is also the role of the legislation. What is the right framework that we need to have in place? And if we look, for example, at the field of payments, indeed we have seen a lot of private innovation in the payment sector. This is essential for our economy. It's essential for everyone today. I don't know anyone that today can go and receive your salary in cash, and then just live completely cash-based society and economy. So people do need and depend on these systems. At the same time, because of the circumstances in which we are living, we are seeing an increasing need, first of all, to prepare ourselves, to create resilience, but also to develop more inclusive means of payments. And that is what we're going to discuss probably also when it comes to a digital euro and consumers expect on that. Because even when we see on economies, let's take the Nordics, that they have gone very quickly cashless, now they are revisiting those decisions because there is a fundamental question of inclusiveness that have not been addressed to a sufficient extent. And outsourcing that to entirely the private sector to provide these digital means of payments have fallen short to address those expectations. So yeah, to keep the answer now short, indeed, there is this expectation that things needs to be done and in an appropriate manner to create that stability. And when we look at the digital euro or the other instruments, the question of whether the choices that we'll make today is going to be able to define ultimately whether we'll actually will benefit of it.
Governor Radović, I want to turn to you because your case, your country is very special in that debate. You use the euro, but you're not part of, or at least not officially part of the eurozone. So it feels like you are hit by shocks and chaos from all sides, and are missing one very important tool to address it. But I'm wondering how you look at financial stability concerns and financial integration questions in the context of the economic environment at the moment.
Well, first of all, let me say that it is my great pleasure to be at the Bled Strategic Forum. And this 20th anniversary was a fantastic opportunity to see that a small European country can actually send very strong messages which are exemplary and which are great guidance for the rest of the European Union. I think the messages that we received yesterday from Deputy Prime Minister and Foreign Minister Fajon and from President Nataša Pirc-Musar were the messages which should actually make us think twice and make us actually realize the moment in which we find ourselves. I mean, if I speak from the perspective of the small country, which is an enlargement accession country, which has its specificities, but at the same time is struggling hard and has been struggling to accede to the European Union since essentially 2007 when we started our accession process, I can only say that basically what is happening in terms of geopolitical uncertainty, geoeconomic fragmentation, in terms of all the challenges to the European monetary policy and how it affects all of us, I can say that this is the crisis from which we actually expect to come out strengthened. And just as my dear colleague was talking about expectations of the European population, I can just say that everybody in the Western Balkans has expectations which are fully aligning with those expectations to actually revive the European growth, revive the strength of the European economy, and actually not settle down with the minimum. And currently we have the bare minimum. If you have a look at the situation where over 20 years, our economic strength has actually been halved. 20 years ago, we accounted, I mean, when I say we, I'm talking about Europe, we accounted for 25% of the global GDP. Today, we are there with 15%, which is significant backsliding, and it shows, well, it's reflected in the latest political and economic developments. I mean, today, Europe is neither political nor economic giant. Today, it's just a junior partner of the US and China. Now, if we are looking from the perspective of Montenegro, you're right. We, as a set of historic circumstances, we were the only country of the former Yugoslavia that didn't have war on its territory. We don't have much pride and glory also to take, I have to say, but at some stage during the 90s, we started using the Deutschmark as a dual currency, through the dual currency system, and later as the only legal tender. And as a consequence, when the euro was introduced in Germany, it was introduced in Montenegro. So what does this mean for our monetary policy? It means that we don't have tools, that we actually import ECB monetary policy, and our credibility actually relies on the credibility of European institutions. But what does this mean for me as governor of the central bank? It means that I have to have rigorous banking supervision, that I have to strive to have very strong alignment with the EU acquis, that I have to enforce AML, CFT, not only regulatory framework, but enforcement, and make sure that I have integrity in financial markets, and that we need to make sure that the system is interoperable and compatible to the maximal level with the EU. And that is exactly what I'm doing. Now, how does the payments story come into it? As part of this wake-up call, which I personally believe is not as, well, the response is not as strong, not as quick, not as decisive as we needed. As part of it, the focus on enlargement is slightly different. I'm not saying that EU 27 are terribly keen on enlargement, but at the same time, challenges, especially in Ukraine, Moldova, and significant challenges where we saw democratic backsliding, and when we saw penetration of geostrategic and geopolitical actors, which are everything but positive towards European intentions and ambitions in that part of the world, I can just say that the initiative of opening and making sure that there is a possibility for accession countries to be included in the single European market ahead of full accession is a visionary sign and a change towards enlargement policy. Now, yesterday you heard in the first panel and in an announcement of all the introductory speakers that Montenegro is envisaged to join in 28, Albania to follow in 29. We have 8 accession countries currently openly, actively negotiating. We have a new market of 65 million people, but we have also legacies and issues which come together. And yesterday also, we had a chance to hear about drawbacks and potential question marks in the EU 27 circles. But at the same time, these question marks, decision-making in the European Union, all the issues which require reform with or without enlargement have been there for ages, for decades already, and I think we don't have much time left. So we need to hurry up. We need to make sure that there is contribution and there is unity, because only as unified, enlarged and strengthened, much more efficient, and with all the potential in use, Europe can do something. Otherwise, we're just going to fall back big time.
Mr. Francesconi, are you hearing that sense of urgency in coming up with a single European payment solution?
Yes, so good afternoon, and very honored to be here as well. Thank you for the invitation to the Central Bank of Slovenia. And so actually, I wanted to elaborate a bit on the landscape that presented Governor Müller earlier, and it will answer your question actually. So, fully agree with the challenge we have in Europe regarding the sovereignty of our payment systems. We need these independent solutions, European solutions made by European for European consumers and citizens. That's very important. And today we have an issue with fragmentation of the European payment landscape. We have many local solutions which are working well locally for domestic payments, but which are not interoperable or which are not allowing cross-border payments when you travel from one country to another. And consumers are traveling from one country to another. It happens. It happens, by the way, more and more. So this fragmentation, what does it create, actually? It creates confusion for consumers. It also creates high cost for banks and for merchants. Because if you have many different solutions at domestic, at local level, it means that merchants, if they want to sell all over Europe, they need to implement and to integrate many different solutions, and this has a really high cost. So what merchants are asking for is to have one solution or a few solutions, let's say, that could allow to cover the whole European market, so that they would be able to integrate only one solution for all the markets. And the situation today is really complex and really costly for merchants. The same for banks, actually, because banks, they are also to rely on international solutions, which are really costly. If you mentioned, so we talked about Visa, MasterCard, but we could also mention the large wallet solutions, which are growing very, very quickly. These are owned by big tech companies, which are mainly from the US, Google and Apple, not to mention them, or PayPal as well, which is also gaining ground in some market in Europe. So banks are also relying, and the cost of these solutions is also becoming really high, and it's becoming a burden also for banks. So we have this sense of urgency. We need quickly sovereign independent solutions to pay in Europe, all over Europe, and that's why actually Wero has been created. So that was our purpose, you know. First of all, so indeed it's not the first initiative of the banking sector to bring this European solution, but this time, you know, there was back in 2020 the retail payment strategy of the European Commission, then the retail payment strategy of the European Central Bank. And actually, what we did is that we took these strategies and we tried to develop a solution which could tick all the boxes of the strategy, and that's exactly what we did. So we are indeed a privately owned initiative, EP company with a product called Wero, and then we are based on instant payments. So what we want to do is not to create a new payment rail. So instant payment is there. Indeed, it's here to stay, and it's very good, and it's working very well. But what we want to create is the additional layer on top of instant payment to make it fully answering the needs of consumers and merchants. And this with a very good user experience and with costs which are much lower than what we have today on the market.
Let me ask you then, why does this not already exist and hasn't existed for a very long time? What are some of the challenges that are standing between the wallet and where we are at the moment?
Well, yeah, it's not, you know, it's not easy to get together. We know the European construction has been slow as well, huh? So it's not easy for banks of different markets to come together and agree on a common project. So that's what we did back in 2021. So for the moment, we have indeed German banks, French banks, Belgian banks, and Dutch banks, which have created this joint initiative. So we will cover next year 5 markets. Those 5 markets, they already represent a very large share of retail payments in Europe, but it's not enough. And why? Yeah, it's not that easy. And I think the combination of all the factors, the retail payment strategies, the situation with the post-COVID situation has made it possible for banks to agree on a common solution. And now we are there, already launched in 3 markets and 2 markets to come. Of course, it's not enough, and we need to go further. But yeah, we are working on additional markets.
Acting Governor, let me ask you, why has it been so difficult to create a real payment solution for Europe? And I suppose also, what does it take to make it happen now?
Well, let me first acknowledge that 25 years ago, or a little bit more, Europeans undertook a really, really important project for the Europe, for us Europeans. So when we introduced Euro, this was a remarkable achievement. And since then, as a central bank, as a European central bank and Euro system, we have placed a lot of emphasis on integration of retail payment markets. So we put in place a payment infrastructure today known as Target, which is in fact T2 and TIPS. And in fact, today it's remarkably easy to pay from one country to another. Imagine 30 years ago, if we wanted to pay to another country, it was different country, different currency, different IBAN structure, whatever, you name it. So a lot has been done in these 25, 30 years. And a lot has been done in terms of payment infrastructure. We have single Euro payment area thanks to that. So we are not in a bad position. However, this SEPA is just one step forward. Madis mentioned a couple of initiatives that exist already in the national level. So we in Slovenia, we have one of them, and it's remarkably easy to just pay to your friends, transfer cash and so on and so on. But if we want to pay to another person from another European country, it would be difficult. So this pan-European end-user solution is not yet there. Why is not yet there? So maybe the private sector would have a better answer, or maybe I will try to answer that. But still, as I said, we emphasize the need to have this pan-European solution. We also have, as said, a retail payment strategy. But at the end of the day, I think that the problem is, first, the harmonization, and second, you need to have a critical mass to cover the costs. So there are huge costs to be successful in this implementation, and maybe this was the reason for the private sector. So, and I'm pretty sure that with the use of, with the introduction of digital euro, we will introduce the technology. We will present the need. And this would also help the private sector. As Madis alluded, this is not, so digital euro is not, the competition. It's something that complements private solutions. And I'm pretty sure that this would help.
Do consumers agree?
To a large extent, yes. Let's see what is the outcome of the project. But if I might, I can just bring a couple of thoughts on that. Like central bankers, I also like data. And we need to look at actually what the data is telling us. If we look at cross-border payments in Europe, 90% of cross-border payments in Europe are relying on Visa, MasterCard. That's already really important data. When we look at data of the ECB on payment attitude of consumers, 39% are card-based payments. Only 6% mobile payments. So this data is also telling us about what consumers ultimately expect. When we see that we have a duopoly, which translates lack of competition, obviously that creates a pressure in the system. Also, increase prices for consumers. And like the acting governor said, this is about creating an alternative. It's about an alternative. And the design of this alternative will define ultimately its success. And let's take the case of the card payments. Wero, while I'm a big fan, I use it a lot as well in Belgium, doesn't provide a card-based system. Doesn't allow to charge money on a card and go and pay, which are features that we would like to see in the digital euro. These are alternatives. Wero is not to be accepted by law. So mandatory, while the digital euro could. So all these features is what are going to shape this alternative. And there is a lot of potential in it from resilience point of view, but also from an inclusiveness point of view when we look at these consumers' expectations and usage trends.
I want to turn to you because I think you made a very interesting point earlier about joining the EU in 28 potentially. And I know you've been pushing hard for checking a lot of boxes, including on financial integration, well before that time. And I would like to know how reforms, especially in this area, are in a way a hurdle you need to clear or want to clear to be fully or be a full participant in the single market in Europe.
Thank you, Jana. First, I would just like to briefly address something that wasn't really addressed. I mean, it is not up to the people sitting on this panel to actually deliver the reply. I mean, they can, but it is not their decision-making and their competence to actually deliver a reply why we are lagging behind so much, why we don't have the solutions, why the banking union is not there, why the capital markets union is not there. I mean, today's proposal barely, only in name, savings and investments union differs from the proposal which was on the table in 2014. It boils down to the fact that decision makers are not really ready to see that national sovereignty in today's global order and in completely changed landscape doesn't matter so much, that we are becoming irrelevant, and that if we continue along this path, we will actually continue this trend. So basically, I believe that, well, what we have seen and what we are seeing is, well, too much regulation. We have seen recently. I was on a panel where one of my distinguished colleagues made a parallel, and over a period of 5 years, the European Union produced 13,500 pieces of regulatory framework, legislation, laws, whereas for the same domain, the US had 3,500. So this over-regulated environment, the fact that we cannot come to terms because we have the decision-making process, which is actually very cumbersome and limiting, and the fact that essentially you have complete differences in every single jurisdiction. So if you have 27 insolvency laws, if you have 27 regulatory approaches, if you have 27 laws which are different interpretations of EU directives and regulations, it is absolutely normal that the private sector will not wish to go across 27 completely different risks in terms of implementing a solution. We need to unify and make sure that we have a consistent and open level playing field for the private sector to be able to have private sector solutions. Do you agree? Yes. So basically, it is up to decision makers, it is up to our national authorities, but also Brussels, because I'm not convinced that we always send our best and the brightest to Brussels. And it is up to EU member states, future member states, to realize that the economic, political, overall benefit for our citizens lies in making sure that we have a unified approach and, if possible, at some stage, more federal approach towards the European Union, because this way we're not going to get that far. Now, when it comes to Montenegro, I said that it was a privilege to have a chance to accede to the single European market through extending the possibility to join single euro payment area years ahead of accession. Also, another project which is actually being developed under the auspices of the European Central Bank Governing Council. This is cumbersome as a procedure in terms of making sure that you align on entire regulatory framework, first in banking, then in payments, and the third leg is anti-money laundering and countering terrorism. So basically, my central bank, my team worked very diligently. We submitted everything 1 year ahead of time. We fulfilled the EU agenda and delivered on all chapters 100%, 3 years ahead of time. And the reward was becoming the first, well, the front runner, the first country to join SEPA, and also helping the others from the region do the same and follow in our footsteps. Now, this is demanding because I told about the pace of regulation and over-regulated system, which means the moment when you transpose a directive and regulation, within a couple of months there's a new one to be transposed. And you also need to factor into account the national authorities, because parliaments are not the quickest, the government, which needs also, again, to do their own procedures. So you're always sort of running against moving targets, which is cumbersome, because you don't still have this the delineating line where you say, well, this is the stop, this is where we draw the line, and this is where, from this benchmark, we are going to decide whether the country is compliant and whether it closes the chapters or not. But then again, what I'm doing at the central bank, I'm telling to my team, we don't have the luxury to run behind the EU member states. In some areas, we're actually being front runners. So in terms of implementing standard for payments, ISO 20022, the deadline in the European Union was November. We implemented everything in March. In terms of a number of areas, I'm not going to bore the audience with technical details, but we, the entire team in Montenegro, not only in the central bank, needs to run ahead of schedule and sometimes ahead of EU peers to demonstrate that with professional quality, integrity and implementation, we deserve to be a fully fledged member, and that is what we are doing. Now, why this is important? This is a win-win solution for everybody. Montenegro, from the moment when it joined SEPA, this was essentially June last year, November it was formalized, now in October we're having first payments. I can just say that when we measured and when we did internal modeling at the central bank, the implementation of these two reforms by the central bank is going to lift Montenegrin convergence with the European Union by 11 percentage points by a decade. So from 50, we are going to go, just thanks to these two reforms, to 62% of convergence with the EU GDP per capita. And this is significant. If we extend this to the Western Balkans region, we are talking about 1 billion in savings. So just to illustrate it for the general public, currently to send a transaction of 1,000 euros to Slovenia, to Italy or Germany, or the United Kingdom, which is also a member of SEPA, you pay between 70 to 120 euros per transaction. The average cost of a transaction to these 40 countries which are making the single euro payment area is 74 euros. Do you know what the average cost of transaction in the European Union is for EU citizens? 1 cent to 2 cents. So this makes a considerable difference, and it makes huge saving for the economy. But on the other hand, it's not only Montenegro and win-win sort of strategy for countries, enlargement countries. It's a great win-win for the European Union itself, because we are decreasing the cost of payments infrastructure significantly. We are extending the market significantly, and we are strengthening EU's strategic autonomy. So I believe that yes, you do need to put in considerable effort. Yes, it is straining the people, the funds, the capacity significantly, but then again, results are there, and I believe that this is the only way and the only path that Montenegro and the adjacent countries can take.
Certainly some impressive statistics there. Now I'm wondering, is the digital euro going to do the same? No, I mean, probably not, but Acting Governor, I am wondering about how the context in which we talk about the digital euro. It's we talk about it as a means of payment, of course, but we are also very much talking about it as some sort of a geopolitical defense, right? And you brought this up actually. I'm sometimes a bit surprised that central bankers and affiliated people are the only ones really pushing very hard for it, and the voices out of government circles, out of Brussels, are a lot less loud on that tool. So I'm wondering why that is, and also you know, what maybe if you are so convinced that this is needed, what you can do to make yourself heard better.
I will have difficulty to answer why is that, but I will try to tell the story a little bit around. So yes, indeed, digital euro can be seen, can be seen beyond a monetary policy tool. It could be viewed as a geopolitical and economic sovereignty tool. And to be honest, a couple of years ago, probably this project wouldn't go through politically, wouldn't go through even technically, but more or less politically. But a lot of things changed in this couple of years. I have named a couple of challenges that we face today, and we also see that. From today to tomorrow, one solution that you have might be closed for the whole economy because somebody decides on this. I'm referring to potential, not the possibility to use the two American solutions. So this is in fact something that we have to think about that, and we have to think about our independence, financial future, how we facilitate our economic resilience and geopolitical influence. So why we are so eager at the central bank? Of course, we see the huge success that Euro had. We see also the huge success that this improvement of payment systems had in last 25 years. Irena, you mentioned all the costs savings that were there. So yeah, we just simply think that digital euro offers a sovereignty option for Europe, for European citizens, and not to be reliant on non-European payment providers. As regards to what we can do to help the policymakers to decide, of course we do a lot. We cover all the technical parts. We also support the legislative process. So we support the two co-legislators, the Parliament and the Council. And we, of course, tried to push in last couple of years the process going forward. Of course, at the end of the day, there are politicians who decide. We just hope that our arguments and our solutions will be good enough that they will decide positively. Of course, every process includes also feedback from stakeholders, wider public. So this also needs time. And for this, it takes a little bit longer than we as central bankers would want. But at the end of the day, I think we are on a good pace to achieve what we are trying to achieve.
Mr. Francesconi, how do you like the digital euro? It seems there is going to be a bit of competition between your product, between Euro and the digital euro once it exists.
Yeah, so it's not that we don't like the digital euro. It's actually that from the banking sector, we have quite a big concern. It's that actually, as you said, it will take time to be decided and it will take time to arrive. So will it be on time to solve the issue we have today if the digital euro only arrives in 5 years from now? So that's, I think, a big concern. The second concern from the banking sector and from EP company is that the commercial banks will be in charge of the distribution of the digital euro. So for commercial banks, but also for the acceptance sector, for merchants and acquirers, it will be additional investments. So the banking sector has assessed the investment that would be needed. So it's in billions of euros. And our concern in that respect is that this investment will divert investments in other solutions which are also needed, like Wiro, for example, which are also needed to further develop these solutions at European level. So, because our ambition is to be a real pan-European payment solution, which covers the whole EU and beyond the SEPA region as well. So, of course, this takes time also, but we shouldn't stop the momentum now. And so we are working on new markets expansion. So, for example, there will be very soon a decision from the Austrian banks to join Wiro. We hope it will be positive. And also we are building now an interoperability framework with EuroPA, so other large domestic solutions like Bizum in Spain or Vis Mobile Pay in the Nordic countries. And so the objective is to make sure that we can also have an interoperability between Wiro and those solutions to make it fully interoperable and cover all cross-border transactions.
So the two options might just coexist?
Yeah, exactly.
Now, I want to turn to you and ask, because whenever I ask my friends, my family, my colleagues, do we need this? Do we need a digital euro? How do you pay? The answer is, I have what I need. And certainly I don't want any more confusing things. So I suppose my question is, what are we trying to fix at the consumer level? What needs to be in it for the consumer so that these new means of payment will actually also be used in the end?
Exactly. The success of the digital euro depends on people using it, endorsing it. And we actually also went out and surveyed people in 10 countries of the Eurozone. And we tried to identify, so what is important for people when you look at the digital euro? If they will have the possibility to design the digital euro themselves, so what should it be in it? And a couple of things that came up. Easy to use. So, for example, 88% believe that it's important to have access to a payment card. So, again, here, purely a wallet or a digital app will not be sufficient in this regard because, indeed, there are other options out there as well. Security, very high standards of security because people are actually quite upset, to be honest, with the level of payment frauds that exist. Even after having the two-tier authentication, we still see that fraud is on the rise. So obviously they would like to see something that is safer than many of the current means. Privacy. Privacy is an important element that here plays into account, while 81% of respondents are concerned about this. And if we look at our host country, Slovenia, this is even higher. It's 84%. And this is also part of the survey that our colleagues from our national consumer organization here in Slovenia conducted. Universal acceptance, online and offline. And, of course, the question of low or no fees. And these are elements that help us to identify what the euro needs in order to be successful, but also to differentiate itself, to create a real alternative. And also links to what Madis was saying at the beginning of his speech. Cash is also declining. Cash becomes less available, so we need to prepare for the future. And when I look at the digital euro, I want to see a real alternative for cash, which is, as I said before, resilient, but also inclusive from its very design.
Governor Radović, I know there is a bit of a challenge for Montenegro in that it will only it's on track to join the EU only in 2028. Should the country be able to or be allowed to pilot infrastructure on the digital euro before that, if it then exists?
Thank you. First of all, I would like to say that I am, as a European citizen, quite excited about the digital euro because if you look at it from the perspective of the citizen or even from the perspective of the central banker, we have to acknowledge one reality, not out of belief, not out of conviction, but out of the mere fact that it is reality. Bitcoin, cryptocurrencies, stable coins are not going to go away. As much as the central banking community is trying to defy the concept and trying to still place the arguments which have been quite unchanged for a significant period of time. What has happened across the Atlantic recently, and the fact that stablecoins are 98% of them are pegged to the US dollar, means that if we don't react, and if digital euro, which is complementary to all the initiatives because it is digital cash, then the ECB will not have monetary policy transmission mechanism because essentially you will have US-pegged digital currencies which are going to dominate your market. So essentially this is a step in which we need to go. And once again, I have a feeling that I'm repeating myself, but I think we are slow. We are very, very slow. I mean, sometimes when I hear to MEPs from the Econ committee, including the rapporteur, when they talk about, let's say, privacy issues, I mean, well, we said 84% in Slovenia, very high in Germany, in a number of member states. Well, there's no issue of privacy when settlements are done through, let's say, Visa and MasterCard. There was no issue of privacy when, after 9/11, all the data of European consumers were actually appropriated and used. So we are happier to give our data elsewhere, but we're not happy for the ECB to have access to our data, even though, again, there is very strong clarity that the ECB will not have access to the data. It will have cumulative statistical access, and the access will remain with the banks. And for Montenegro, again, it is very important from the point of view of efficiency in the market, from the point of view of not allowing for substitution of currencies. I mean, cryptocurrency concept is quite popular in the region. It's very popular in Montenegro among the youth. The central bank recently had a survey. Among the youth, 60% of our youth up to 18 have crypto wallets. So we have to make sure that we don't leave the accession countries behind. And I believe that Montenegro, other Eurozone countries, there are a number of them that are not sitting at the ECB Governing Council, should be involved in the testing phase and should actually put their capacities and availability, because we are ultimately all the time, over the past year and longer, talking about strategic autonomy and talking about making sure that European domain is fully appropriated by Europe.
Acting Governor, I will pose the final question to you. The pressure is on, we heard. Are we on a good track to make it happen in a reasonable time frame?
Well, I think we are on a good track. As I said before, it takes some time to think about all the things that also consumers want. So privacy, all the things that you mentioned were on the board. They were taken on the board. So we need to think about that. We need to find a top solution for digital euro. We know that it will be legal tender. So from this point of view, everybody needs to trust in it. So we need to have the privacy, we need to have the availability, also offline, and so on and so on. So these are all the features. But one is a technical point of view, which will, of course, be resolved. But then the other is political preparedness, and this is something that we cannot affect. We can just support politicians. At the end of the day, they need to decide. So I think they will eventually, or better sooner than later, but let's cross fingers for that.
Well, that was, I think, a very good final last word. I'm afraid I'm being shown the sign to stop talking along with the rest of the panel. So I apologize if you had all collected questions. I'm sure we can maybe arrange to have some urgent ones answered, outside the door. But for me, what's left to say is thank you very much for listening. We really enjoyed having this conversation. I hope you did too. And I hope you are a bit smarter. I am. So thank you.